Hello, this is Japanese Economic Review Channel. Today, we will analyze the Bank of Japan's preliminary money stock data for March 2026. Rather than just looking at the surface numbers, we will diagnose the underlying structural shifts in Japan's liquidity and where the capital is flowing. Looking at the executive dashboard, we see a synchronized acceleration across all major monetary aggregates. Broadly defined liquidity L reached 2,268.5 trillion yen, expanding at 2.8% year-over-year. M2 and M3 also show solid growth at 2.0% and 1.4%, indicating robust liquidity expansion. Money stock operates like a matryoshka doll. At the core is narrow M1 at 1,089.8 trillion yen. Surrounding this is M3. And finally, broad liquidity L at 2,268.5 trillion yen. L is more than double the size of M1, highlighting the massive wealth stored outside immediate cash and checking deposits. This matrix reveals a critical divergence. While broad liquidity L is expanding rapidly at 2.8%, narrow liquidity M1 is actively contracting by 0.4%. This shrinking of highly liquid cash against the expansion of broader money supply signals a fundamental shift in how capital is being positioned. Our 24-month trajectory clearly illustrates this Q1 2026 acceleration. After a slowdown in mid-2025, the growth velocity of broad liquidity in M3 has rebounded sharply. Yet M1 remains trapped in negative territory. This divergence confirms that the new money isn't sitting idle, it's moving. What we call the Great Shift is visible here in M3's anatomy. M1 components like currency are shrinking. Conversely, yield-bearing and time-locked assets are surging. Quasi-money grew by 5.2% and CDs by 6.2%. Capital is deliberately rotating from stagnant cash to yield-generating accounts. How do we bridge the 643 trillion yen gap between traditional M3 and broad liquidity L? The answer lies in trust accounts. Pecuniary and investment trusts account for nearly 88% of this gap. The sheer scale of these assets proves a massive structural shift toward active wealth management. Here we plot velocity against scale to isolate true momentum. Beware of outliers. Commercial paper shows a massive 536.2% growth, but its actual scale is statistically zero. The true structural engines are investment trusts at 11.7% and government securities at 20.7%, combining high velocity with massive scale. To summarize our strategic takeaways, first, Q1 showed strong broad liquidity acceleration. Second, we are witnessing a deliberate yield-seeking rotation away from cash. Finally, the investment trust engine is strongly driving market participation outside the traditional banking system. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.